Next topic that we are moving on to is NVDA. NVDA, they fell about 7-8% yesterday after hours. They posted revenue of $8.2 billion, beating expectations of $8.1 billion, and they beat earnings per share $1.36 over $1.29. Now, NVIDIA is still trading 29 times future earnings. So the question is, let's go to Justin. Is NVIDIA a buy for the long-term strategy at just a juicier price, or do you think it's some more pain?
Yeah, I mean, first of all, you're the first person I've ever heard call it NVIDIA. I've only ever heard NVIDIA, but who
You're
am I?
probably right, to be honest. You're probably right.
But they're trading at $416 billion at $169 a share. But that's not updated for this, down 4%. Look, it's still fully valued at the valuations it is. But if you look through the actual growth rate, so in Q1, they are tracking 8% quarter over quarter, which translates compounded to an annual rate of over 35% growth, which again is lower than the 50+% growth we saw them in the last 2 years. So that's a little bit weaker, but I think what everybody's more interested in is they're guiding to a quarter over quarter loss in actually a decline in revenues. But you actually have to take into account that includes a $500 million loss related to COVID lockdowns in China and Russia. So if you kind of layer that back into pro forma run rate adjusted revenue or whatever the heck you want to call it, that's like $8.6 billion, which is a slight growth. So regardless, I mean, 8.6 over 8.288. So 8.6 over 8.288. That's, yeah. So you're still seeing a deceleration. So regardless, chips are a great business, super cycle. But regardless, they still sell a lot of GPUs and gaming stuff and crypto mining rigs. So that's going to be a headwind. And they're not immune to the consumer spending less.
Tom, do you think gaming, chips, crypto mining, and the metaverse makes NVIDIA a buy right now?
NVIDIA has probably one of the better business models in the market right now, definitely in its category. They have the data center business, which is going stronger than ever. It's exploding out of the stratosphere. I believe $3.5 billion on the last cycle. The gaming business is weaker because people are not spending as much time at home. Cryptocurrency mining isn't as much at 30,000 Bitcoin. Obviously, there's not enough incentives. But even that, you have to understand that if anything stays from this whole post-COVID world is work from home. People want to go outside for everything except work. So work from home is here to stay, at least in some sort of capacity, which will definitely keep fueling up even the gaming business. Because when we say gaming, we obviously mean the graphic processors and everything else. So also work computers as well. I'm really on NVIDIA's camp here because I see Jensen Huang as probably a top 3 CEO. Behind Elon Musk. I absolutely love what he's doing. And I like to invest in companies that have terrific management. At the end of the day, they're really hard to rival because it's a growth story, a successful growth story. Grew 70% last year, growing another 40% even with the reduced guidance this year. They're giving out dividends. I've never heard of a growth company giving out dividends.
That's not a great sign always.
Well, it is a nice thing to have when you're investing in growth to get some cash dollars in your portfolio. I mean, not like if anything, in times of crisis, recession, bear market, a dividend element was always nice to have. They have a minuscule dividend. I think it's like a 0.1%, but it's kind of a jack of all trades if you think about it.
They're also doing $15 billion in buybacks. They announced yesterday.
Yeah, that's important.
They're behaving a little bit like they remind me a lot of Google in the sense of high growth, but behaving like a value company in a sense. The thing is, the one knock I have on NVIDIA and not NVIDIA is that they're still trading, even they dropped 50% of the past 6 months, they're still trading 3 times more expensive than Google. So Google is trading at 5 times price to sales. NVIDIA is at 15 price to sales. I know Justin isn't like... he likes to criticize me obsessing about price to sales.
Yeah, but price to sales doesn't matter here because they have 60+% gross margin or EBITDA margins. So like,
Wait. Can you explain why that doesn't matter because of those EBITDA margins?
well, no. Price to sales is pretty good for comparing apples to apples companies, but NVIDIA has like double the EBITDA margins of most other companies. So
But Google also has really good EBITDA margins, right? So why wouldn't it be?
yeah, but not as good as NVIDIA's. We can check in real time.
No, it's 27 to 40. NVIDIA's EBITDA is about 40%, and Google is about 28%.
So according to adjusted EBITDA, so here it's 52 from this data for NVIDIA, 52%, and Google is 40%. What I'm saying is when you like these guys are really profitable, so you should be valuing them on EPS or EBITDA growth. So I mean, whatever. So like I agree with you though. Your conclusion is the same regardless.
No, but here's the thing. You're talking about this would have been a stronger case to be made if we were talking about 20% EBITDA in one company, 40% EBITDA in the other company. I mean, we're talking about the 13% difference in EBITDA margin trailing 12 months, and yet the company is still 3 times more valuable on the price to sales ratio. I mean, the gap has to make sense.
Yeah, I'm just adding that it isn't 3 times more valued on a
2.5
profit basis.
times if you adjust for EBITDA margin.
I think it's like 2 times. Yeah, it's twice as expensive. So again, I'm agreeing with you that it's twice as expensive as Google. But then right now we're having headlines that Google might get, or they're putting through a bill that Google might get broken up. We just talked about this week, right?
Yeah,
so I think there's a lot of. And historically, NVIDIA has been thought about like the past 2 years is growing at 50% plus. I just did the math. If you believe that their growth rate that they're guiding to for Q2, they're actually only compounding at 15% growth year on an annualized basis, which is about the same as Google or Microsoft. So I don't know. It's pretty expensive. It depends on if you think that this growth slowdown is a blip for them, or if it's more them decelerating for the long term.
Just look at the growth numbers. Look at the revenue growth and compare it to Google. There, I think not in the EBITDA margin, you see the real story in the growth. If you look at NVIDIA, 60% growth, 40% growth guidance forward. You look at Google, it's 40%, 24%. That's where I think the real story hides. Not in the margins, but I think in the growth. I think their ceiling is much higher compared to where Google still has to go. And they don't have the looming threat of Lina Khan and her bang of woke lieutenants going
I wouldn't compare them to Google as much as I don't know who I'd compare them to, but they're trading at 22 times EBITDA on like a 2022 calendar year basis. So they're more expensive than Microsoft. They're now decelerating to the same growth rate as Microsoft. And the big question is, do they deserve like a higher multiple than some of these other big, more defensible companies with like SaaS sticky revenues and stuff like that, because they have more growth? I think I agree with you. They have like the AI chip that BYD is building all their autonomous automobiles on. They have all these other things and the data center and whatever. So this might be a short-term blip. I mean, you saw in 2020, like they had declines in revenue because of COVID, and then they just popped right off at over 50% for the 2 years after. So, I mean, are you buying NVIDIA, Tom?
I'm so afraid of touching this company. I always time it incorrectly. I love NVIDIA, but I have such bad luck with it. I sold at 180. I wrote it up from 120 to 180. I sold at 180. Then it jumped to 300, and I missed that, and everybody gave me slack for that. And I bought in back on the way down at 260 and rode it all the way down to the high 200s. The low 200s. So every time I tried to get in on NVIDIA, I got at the absolutely worst time. So I'm just staying away because I think I have some bad juju with this stock.
All right. Tom is a grower, or Tom loves growth stocks, which is why he's a grower and not a shower. Another.
Taman.
Who's the man?
Tom the man.
Tom the man. Okay.
Tom the man.